morning, everybody, from a nice, lovely, not too cold Johannesburg this morning. We can see we're going into spring here. We'll probably be a little bit cold before we get there, but anyway, here we are this morning. So, first of all, if you haven't heard about it, SARS has submitted the Taxation Laws Amendment Bill for 2025 this week. Now, this is to make sure that everything that was discussed in the budget comes into being, but also there are some golden nuggets in there. And the media has been carrying on about all the issues in this bill going forward. So we've got until the 12th of September to give feedback about what is included in this bill. And I just want to highlight a few areas that might be interesting for financial planners. So one rather controversial amendment relates to taxpayers' reliance on the scope of a bona fide inadvertent error to escape paying huge understatement penalties. Now, if you have done that in the past, or as a tax practitioner, you may have used that excuse for someone who did not submit a tax return, who did not pay their penalties, who maybe underestimated, or what, the story might have been. That loophole seems to be going to be closed from next year. These amendments also pave the way for real-time reporting of VAT and an extension of the voluntary disclosure program to include defaults under the Custom and Excise Act. Treasury also intends to reduce the threshold for the ring fencing of assessed losses to prevent abuse and promote fairness. Now, this is to ensure that losses from non-commercial trades cannot be used to evade paying taxes from a commercial trade. There's some things in there that you maybe want to have a look at and comment on. Then also there are certain areas that they are also closing in on. There's an interesting article on MoneyWeb that explains how VAT on schools might become an issue. Now, school fees are never supposed to include VAT, but there are some schools where additional costs that you pay towards the school have included VAT in the past. The schools have registered for VAT. That can include things like extramural activities, sales from tuck shops, sales from clothing banks, and those type of things. And this specific bill has made it clear that all of those should be included under school fees, and no schools are allowed to use VAT. So that's also going to be interesting, because that type of thing can maybe cause a VAT liability for schools that needs to be paid at some point next year. Then also what this bill includes is that South Africans who have worked abroad and accumulated foreign retirement funds, or foreign nationals who want to become South African tax residents, needs to know that SARS are now going to tax rights on their foreign retirement funds, and this proposed amendment is set to come into effect on the 1st of March. Now, in the past, Section 10(1)(cg)(3) of the Income Tax Act exempts from normal tax any lump sum or pension or annuity that any South African accrues or receives from outside South Africa source for foreign services rendered in terms of past employment. So that would include payments from retirement funds that are situated in any other country that has been exempt from normal tax up to now. This whole section is going to be scrapped, which means that anybody who receives international pensions will be taxed in South Africa if you are a South African. There's another issue that SARS is included in this bill, and it seems that preference shares might also be taxed from next year onward. And that is something that is specifically in the corporate finance space that might cause enormous issues, especially with the ways that some BEE deals are structured. So it seems that this bill is causing some concern. It is very clear that SARS is tightening up every single loophole that they're finding to make sure that they can get in the most taxes that is possible. And on that note, in FPI, or in South Africa rather, FPI is part of what we call Money Smart Week SA. It is the biggest financial literacy drive in South Africa, where everybody that is involved with financial literacy, consumer education, comes together and makes sure that we educate South Africa during this week. We have got 2 free webinars for consumers. If you have anybody that might be interested in attending these free hour webinars Tuesday afternoon and Wednesday afternoon, we would love to see all people financially literate in South Africa so you can make better decisions. And on that note, see you next week.